people would say we've got like the perfect storm or the perfect recipe for a stock market correction, which is exactly what we're seeing. So let's define what a correction is.
Okay, when we use the term correction, we're using a very specific term that the economists use to denote a decline in the market of 10% or more. So, for example, we are currently in a correction. The market is down 10.9% from its recent high. So
which was when?
I believe it was December
29th,
something like that.
Right,
yeah.
end of December.
Exactly. So, and we also talk about bear markets sometimes. And bear markets are when the market is down 20% or more from its prior high. So corrections happen on average. We were just looking at the numbers, and they're consistently holding true that on average corrections, those 10%, declines happen about once a year.
Right. We just hadn't seen one.
I think
we talked about this 5 months ago when we had the correction last year.
Right, because it was back in 2011 or maybe 2012 if you count a 9% at that point when we had our prior correction. Otherwise, things have been going pretty much up, up, and up, little 5% downturns. And I think it's also important to clarify that when we say it, we had a 10% correction last year, this year, we're not saying that the market was down 10% last year, because it wasn't. The market was up.
Right.
But during the year, it fell 10% and then it bounced back, because if it just goes down 10% on average once a year, and that was all it did, then we'd never invest.
Exactly. No, that's kind of the point. But here's the deal, and here's our number one tip, is tune out the noise.
Right.
Tune out the noise. Write that down. What do we mean by noise? We mean the media. We mean the newspaper headlines. Because they will camp on when it's down. I mean, that makes for news. If it bleeds, it leads.
Right.
That's their mantra. So that's what you're going to see when you flip on the news. That's what you're going to see when you open the morning paper and go to the business section. They need to attract your eyeballs to their stuff.
Right.
They ain't going to be with good stuff.
Right.
They're going to attract you with the horrible stuff.
They're not. Here's what they're not going to say. We've got a 10% correction. We're down, and it's happened once this year, which is about average for every year.
So turn the page and look at the sports section.
Right. So keep moving on.
Move on.
No.
Yeah.
They're going to emphasize and reiterate and put bears up all over the screen and show the guys with hands on their faces on Wall Street. They're going to give you every sensational image to continue to try and hold that attention as long as possible.
So turn off the TV. There you go.
Number one.
Turn off the television. Throw away the business section. Stay off of the financial websites. It's going to be natural to worry about your investments, question your commitment to your strategy. But here's the deal. As financial professionals, Rick and I, we want to pass along, that even though, we need to handle volatile markets, don't let these brief periods of negativity derail your overall strategy. You listen to this show, and Rick and I always talk about sticking to your strategy, sticking to your plan. That's number one. Write that down. Tune out the noise. Back in a minute.